Now speaking, Brian Denio, Investor Relations. MongoDB reported its first quarter fiscal 2024 financial results with revenue of $213 million, up 53% year-over-year and non-GAAP operating margin of -1%. CEO David Echeria noted that the company saw strong customer demand for its product platform and was encouraged by the success it had in expanding its customer base across a variety of industries. COO and CFO Michael Gordon added that MongoDB's investments and headcount grew significantly during the quarter to position the company for continued growth. The company also gave guidance for Q2 of fiscal 2024, expecting revenue between $221 million and $223 million, with non-GAAP operating margins of -2% to -4%. Now speaking, David Echeria, President and Chief Executive Officer. We had a strong Q1 performance despite challenging market conditions with revenue of $368 million, a 29% year-over-year increase and above the high end of our guidance. We added approximately 2,300 customers during the quarter, the highest number in over 2 years, including over 300 new direct sales customers. Atlas consumption was ahead of expectations and retention rates remained strong. Our new business success is due to the mission criticality of our platform and sharp execution by our go-to-market teams. MongoDB is an essential platform for customers to deliver their core value proposition, provide customers with great experiences, and drive operational efficiency. AI will be the next frontier of developer productivity and will likely lead to an increase in software development velocity. Companies can increase their software ambitions and rapidly launch more applications to transform their business. Companies like China Mobile, Tata Digital, and Grant Thornton International are leveraging the power of our developer data platform. Shutterfly, Radial, Bendigo and Adelaide Bank are examples of customers leveraging MongoDB in their digital transformation journeys. We invite everyone to join us at MongoDB.local New York City at the Javits Center on June 22 for our investor session. Now speaking, Michael Gordon, Chief Financial Officer and Chief Operating Officer. MongoDB delivered strong first quarter results in a difficult environment, with total revenue of $368.3 million, up 29% year-over-year. Atlas, the company's platform, grew 40% compared to the previous year and represented 65% of total revenue. Gross profit was $279.9 million, representing a gross margin of 76%, which is up from 75% in the year-ago period. The income from operations was $43.7 million, or a 12% operating margin for the first quarter, compared to a 6% margin in the year-ago period. Net income for the first quarter was $45.3 million or 56 cents per share based on 81.5 million diluted weighted average shares outstanding. This compares to net income of $15.2 million or 20 cents per share on 77 million diluted weighted average shares outstanding in the year-ago period. The company ended the first quarter with $1.9 billion in cash, cash equivalents, short-term investments, and restricted cash. Operating cash flow in the first quarter was $53.7 million and free cash flow was $51.8 million in the quarter. For the second quarter, the company expects revenue to be in the range of $388 million to $392 million, non-GAAP income from operations to be in the range of $36 million to $39 million, and non-GAAP net income per share to be in the range of 43 cents to 46 cents based on 82.5 million estimated diluted weighted average shares outstanding. For the full fiscal year 2024, the company expects revenue to be in the range of $1.522 billion to $1.542 billion, non-GAAP income from operations to be in the range of $110 million to $125 million, and non-GAAP net income per share to be in the range of $1.42 to $1.56 based on 83 million estimated diluted weighted average shares outstanding. MongoDB reported strong first quarter results despite difficult economic conditions, with total revenue of $368.3 million, up 29% year-over-year. Atlas revenue grew 40% and accounted for 65% of total revenue, while gross profit increased to $279.9 million with a gross margin of 76%, up from 75% in the year-ago period. Income from operations was $43.7 million, or a 12% operating margin, compared to a 6% margin in the year-ago period. Net income for the first quarter was $45.3 million or 56 cents per share based on 81.5 million diluted weighted average shares outstanding. The company ended the first quarter with $1.9 billion in cash, cash equivalents, short-term investments, and restricted cash. Operating cash flow in the first quarter was $53.7 million and free cash flow was $51.8 million. For the second quarter, MongoDB expects revenue to be in the range of $388 million to $392 million, non-GAAP income from operations to be in the range of $36 million to $39 million, and non-GAAP net income per share to be in the range of 43 cents to 46 cents. For the full fiscal year 2024, the company expects revenue to be in the range of $1.522 billion to $1.542 billion, non-GAAP income from operations to be in the range of $110 million to $125 million, and non-GAAP net income per share to be in the range of $1.42 to $1.56. These estimates include a non-GAAP tax provision of approximately 20%. Q2 has 3 more days than Q1, which is a tailwind for Atlas revenue. However, the company expects to see a sequential decline in Enterprise Advanced (EA) revenue after a stronger than expected Q1. There were also large licensing deals signed in Q1 with upfront license revenue components, which will positively impact Q2 revenue by roughly $10 million. Finally, expenses are expected to increase significantly in Q2 due to major sales and marketing events. Barclays analyst Raimo Lenschow inquired, "Dev, how does Mongo fit into the AI world and what opportunities do you see as a result?" David Echeria replied, "Raimo, MongoDB is well positioned to benefit from the growth of AI. Our platform's developer productivity, breadth of use cases, and over 200 new customers in the last quarter running AI apps on Atlas all suggest an increased demand for MongoDB. These customers include startups such as Neuro, Hugging Face, and Tection. We have seen a high level of activity from our existing customer base engaging with us on AI use cases." Barclays analyst Raimo Lenschow inquired, "What has changed to lead to the much higher profitability outlook, and what drove that change?" Michael Gordon replied, "Thanks for the question. Our strong Q1 performance and upgraded revenue outlook were the main contributors to our improved bottom-line output, resulting in a stronger profit and loss statement." Morgan Stanley analyst Sanjit Singh inquired, "Can you provide us with your latest perspective on cloud spend and optimization headwinds and any leading indicators you've seen in May?" David Echeria replied, "Our customers continue to prioritize innovation despite the tough macroeconomic environment. We've seen that manifest in strong new business numbers with an additional 2,300 customers this year and our 6-figure customer count growing 28% year over year and Atlas growth increasing 40%. Our go-to-market teams are doing a great job qualifying opportunities and focusing on acquiring high-usage workloads, which is reflected in our record number of new workloads added this quarter from existing customers." Morgan Stanley analyst Sanjit Singh inquired, "Dev, given MongoDB's success with document models, can it be used to address large language model applications and customer needs for vector databases? Are there any product updates or roadmap items that address this market?" David Echeria replied, "Right, so let's look at how language models are helping us match content to user queries. Vector embeddings are assigned to content which is then stored in a database. This enables searches to be matched to the most relevant content from an LLM. However, an operational data store is still needed to store the actual data. Some bespoke solutions have been developed, but they don't offer a great user experience. We believe, over time, users will be drawn to a more integrated platform that provides a better experience. It's very early days and we're excited to be in a good position to take advantage of this trend." Stifel Financial Corporation analyst Brad Reback inquired, "Dev, what impact did the migration of hundreds of applications from large financial institutions have on this quarter's usage trends?" David Echeria replied, "We are pleased to see that customers are increasingly looking to migrate their applications to MongoDB. However, this process takes time and will not be immediate. It is reflective of our customers' underlying business needs and the value they are deriving from using MongoDB. This in turn drives our revenue, encouraging us to acquire more high-quality workloads which we can onboard quickly for future usage. Ultimately, it is these input metrics that have resulted in the outputs seen this quarter." Stifel Financial Corporation analyst Brad Reback inquired, "Michael, how has the strong start to the year influenced your hiring plans for the remainder of the fiscal year?" Michael Gordon replied, "Thanks Brad, our strong start to the year has led to a significant upgrade of our bottom-line outlook. We are continuing to invest in our long-term strategy while achieving these positive results." Piper Sandler analyst Brent Bracelin inquired, "What drove the record number of new workloads migrating to the platform? Is it Gen AI, and if not, what is driving it?" David Echeria replied, "I think our success is due to the execution of our go-to-market teams and their focus on acquiring workloads. Our incentive mechanisms, management attention and focus are all directed towards acquiring new workloads. This has been reflected in our Q1 results." Piper Sandler analyst Brent Bracelin inquired, "How important is layering in vector feature engines inside of the Mongo database for AI workloads going forward?" Devity Cheria replied, vector embeddings are core to providing accurate, performant content. By storing the data and offering a seamless developer experience, customers can benefit from our AI platform for a wide range of tasks, such as graphs and time series. On June 22, I invite you to join us when we will discuss more details on our AI strategy. Goldman Sachs analyst Kash Rangan inquired, Dev, what progress have you seen in displacing large relational databases and are you confident of expanding deployments moving forward? Michael, how has the customer acquisition rate helped you overcome declining consumption trends and do you feel like you have better visibility into your business than before? Devity Cheria replied, in short, our go-to-market strategy is to acquire new customers and workloads, both from existing customers and new ones. We also focus on onboarding them properly and providing excellent customer service so that these workloads grow. Additionally, we are seeing a trend where customers are migrating their relational workloads to MongoDB for better performance benefits, cost savings or faster feature development. UBS analyst Karl Kierstead inquired, Mike, could you explain the one-time lift from Alibaba in 2Q and how much of it was related to subscription? Is there any follow-through on that lift after 2Q? Michael Gordon replied, our recent extension of our multi-year contract with Alibaba is driving a healthy portion of the 10 million figure in our other line item. It's structured so that we have minimum commitment levels, and any outperformance above that could impact the P&L. We've seen an 8x increase in end-user consumption since the launch of the joint offering, giving us the confidence to extend the contract. UBS analyst Karl Kierstead inquired, Mike, what assumptions are you using to drive the 2Q guide and is there an added boost due to the extra 3 days? Michael Gordon replied, you are correct, the extra days in Q2 make a difference. Our main driver for increasing full-year guidance is Atlas's strong performance in Q1. Our starting ARR for Q2 is higher than expected. We maintain our outlook for the rest of the year and have not changed our view from 90 days ago. Citi analyst Tyler Radke inquired, Dev, what time frame do you see for companies to start modernizing their apps with AI and how are you preparing your go-to-market team to take advantage of this opportunity? Devity Cheria replied, Tyler, we're seeing a lot of customer engagement from AI companies who are interested in using MongoDB to build their applications. Already over 200 customers have deployed apps on MongoDB and the trend is only growing. We believe Atlas is now one of the preferred places for AI companies to go to build apps. Additionally, with all the AI-assisted tools around code generation and improved developer productivity, capacity for development teams is increasing anywhere from 15 to 40%. This will lead to more applications being developed, driving more demand for MongoDB. Citi analyst Tyler Radke inquired, can you quantify the AI-related revenue from 200 customers and existing ones on the platform for the full year? Devity Cheria replied, I think it's too early to tell, Tyler. The market and product market fit of our customers will strongly influence our performance. If they're doing well, we'll benefit. If not, consumption will decrease. However, what we are pleased to see is an increased interest in MongoDB for new AI applications. William Blair & Company analyst Jason Ader inquired, could you please provide an update on the consumption trends throughout the quarter and any additional insights into consumption in May? Michael Gordon replied, overall, our revenue numbers have outperformed our expectations since the start of the slowdown. We've seen some month-to-month variability but generally have seen a consistent level of growth. This is reflected in our guide for fiscal 24 and our plans for the rest of the year. William Blair & Company analyst Jason Ader inquired, can you explain why growth is expected to slow down significantly for the year, given that the macro environment has not changed? Michael Gordon replied, I can confirm that our Q2 ARR saw a higher starting point than expected due to the strong performance in Q1. This has led to an improved revenue outlook for the balance of the year, with stronger growth than anticipated at the beginning of the year. William Blair & Company analyst Jason Ader inquired, what is Atlas' outlook for gross margin over the next couple of years? Michael Gordon replied, we have exceeded our gross margin expectations, particularly with Atlas making up 2/3 of our revenue. Our long-term target model was 70%, but due to our execution of the plan and additional value from the levers we pulled, we feel confident that we can achieve that goal. Macquarie Group analyst Fred Havemeyer inquired, how should we think about Atlas contributing to margin progression as customers sign and expand their usage? Michael Gordon replied, in terms of Atlas revenue, it's consumption-based and closely tied to customers' application usage. While it's not ratable, it does spread over the duration of the contract, typically a 1-year time period. Enterprise Advanced licenses have lumpier upfront revenue compared to Atlas, but it results in the same amount of revenue over time. We have reduced upfront commitments and focused on acquiring more workloads, resulting in 80% of Atlas revenue not flowing through deferred. This has a different effect on the balance sheet and other financial calculations. Canaccord Genuity analyst Kingsley Crane Inquired, can AI workloads and app replatforming create a shift in market share from relational databases to new technologies? Devati Cherya replied, I believe, over the long term, modern applications require more scalable platforms than traditional relational databases can offer. This has been true for many years and increasingly more so as applications become more sophisticated with higher performance and scale requirements. China Mobile is a prime example of this, without even being an AI app. KeyBank Capital Markets analyst Michael Turits inquired, what drove the better-than-expected usage in 1Q? What are your expectations for the rest of the year? KeyBank Capital Markets analyst Michael Turits inquired, what drove the higher-than-anticipated usage in Q1, and why are you expecting a return to previous assumptions for the rest of the year? Michael Gordon replied, the strong execution Dev was referring to is largely attributed to the performance of existing applications. We saw increased activity in terms of queries and reads/writes, which drove higher consumption. While there's some variability period to period, our Q1 performance was within our original guidance for the full year. At this point, we don't have any data that suggests a significant change in outlook for the rest of the year. KeyBank Capital Markets analyst Michael Turits inquired, what was the reason for the sequential decline in deferred revenue that we did not typically see? Michael Gordon replied, billings is not a great metric for us. Roughly 2/3 of our business comes from Atlas, but only 20% of that flows to deferred. We saw slower year-over-year growth from EA, which contributes most of the deferred revenue, and Q1 tends to be seasonally slow for new EA business. Needham & Company analyst Mike Chicos inquired, what is driving the EA outperformance over the last couple of quarters, particularly in Q1? Devati Cherya replied, thanks for your question, Mike. MongoDB offers customers the ability to run their workloads anywhere, and many still choose to run important workloads on-premise. Our value proposition is that when they do decide to move to the cloud, they don't have to rewrite their application. It's a much more graceful migration than having to replatform onto another technology. Additionally, our flexible document model, highly distributed and scalable platform are key features that customers value, whether running on-prem or in the cloud. We still see a lot of demand for both Atlas and EA. Michael Gordon replied, we anticipated Enterprise Advanced to be down, however, the slight sequential gain was a pleasant surprise. Though we had a strong year last year, we are facing tough comparisons throughout the year with EA. Consequently, the slower growth rate in Q1 is evident. Needham & Company analyst Mike Chicos inquired, can Dev provide an update on how Relational Migrator has contributed to customer wins and the investments in time series and search capabilities on MongoDB? Devati Cherya replied, yes, while we do have customers migrating relational workloads to MongoDB, Relational Migrator has not been the primary driver of migration. We're confident in its potential to reduce costs and time associated with migrations, however, we're still early in that journey. Regarding our other capabilities, we've seen strong uptake and plan to make more announcements at our MongoDB.local New York on June 22. AllianceBernstein analyst Firoz Valji inquired, can you provide an outlook on how consumption levels will trend in the next couple of quarters? Is there a possibility that they may reset at a new normal and then resume growth from that level? Michael Gordon replied, based on the data we have, there is currently no reason to assume that our outlook will become materially better or worse for the rest of the year. We remain consistent with our initial view from last quarter's call and we believe this is the right perspective moving forward. AllianceBernstein analyst Firoz Valji inquired, are you seeing an increase in customers migrating away from MongoDB in order to economize on cost? Devati Cherya replied, no, we haven't seen customers moving data out of our platform. Usage is a key factor in determining revenue. If an application is not used, that's not good for the customer, and our revenue drops in turn. There's a strong correlation between usage and price, so customers aren't seeking to migrate data away from Atlas. Guggenheim Partners analyst Howard Ma inquired, can you comment on the relative contribution of relational migrations and Greenfield plus subsequent expansion to the 2,300 net adds in Q2? Michael Gordon replied, thanks for the question, Howard. Generally, we've seen consistent performance in our business. We have seen healthy growth in the China Mobile case study, which is a great example of our long-term market opportunity. Devati Cherya replied, thank you for your question. We had a strong quarter in new business performance, and Atlas consumption rebounded from the previous quarter. Our focus continues to be on acquiring workloads from new and existing customers. We strongly believe AI will drive software development forward, which will lead to increased demand for comprehensive platforms such as MongoDB in the long term. We look forward to seeing you at the Javits Center on June 22. Thank you.